When my mother stood up at our family dinner and announced to everyone that I was the biggest disappointment in our family's history, I simply smiled and pulled out my phone to show her something that would change everything forever. Before we jump back in, tell us where you're tuning in from, and if this story touches you, make sure you're subscribed. Because tomorrow, I've saved something extra special for you. The fluorescent lights hummed overhead in the cramped data center at Meridian Financial Services, casting harsh shadows across rows of servers that never slept. At 2:30 in the morning on a Tuesday, Alexandra Rodriguez was the only human presence in this technological cathedral, surrounded by the constant whisper of cooling fans and the occasional chirp of status indicators. To the few night security guards who passed by during their rounds, she appeared to be just another technical support specialist earning overtime pay by monitoring systems during off-peak hours. This perception could not have been more wrong. Alexandra Rodriguez, known as Alex to her colleagues and family, possessed a master's degree in computer science from Stanford University and had graduated summa cum laude with a thesis on algorithmic trading optimization that her professors had described as groundbreaking. At 28 years old, she had already developed 3 proprietary software applications that had generated millions of dollars in efficiency improvements for previous employers, though her contributions had been systematically overlooked and undercompensated due to organizational politics and gender bias that she had learned to navigate with strategic patience. The journey from Silicon Valley startup environments to the night shift at a mid-tier financial services company had not been voluntary. 2 years earlier, Alexandra had been the lead developer at Technova Solutions, a promising fintech startup that had attracted significant venture capital investment based largely on algorithms that she had designed and implemented. When the company was acquired by a larger corporation, the new management had systematically marginalized her contributions while promoting less qualified male colleagues to leadership positions that should have been hers by right of expertise and achievement. The acquisition had been followed by a series of layoffs that eliminated her position along with several other senior technical roles, officially due to redundancy, but actually because the acquiring company preferred to work with consultants and contractors rather than maintaining permanent technical staff. Alexandra had found herself competing in a job market that consistently undervalued her capabilities, while demanding that she accept positions far below her qualifications and experience level. The role at Meridian Financial Services represented a significant step backward in terms of both compensation and responsibility, but it provided immediate income and health insurance coverage while she developed her next strategic move. The position involved monitoring trading systems and resolving technical issues during overnight hours when market activity was minimal and most problems could be addressed without disrupting business operations. The work was routine and unchallenging for someone with her background, but it offered unexpected advantages that she had learned to leverage systematically. Working during overnight hours provided Alexandra with unprecedented access to financial data, trading patterns, and market inefficiencies that were invisible to those operating during conventional business hours. The financial services industry generated enormous amounts of data continuously, but most analysis occurred during standard business hours, using predetermined parameters and established methodologies that often missed subtle patterns and emerging opportunities. Alexandra had discovered that some of the most significant market movements and trading opportunities occurred during off-peak hours when algorithmic trading systems operated with reduced human oversight. Currency markets, in particular, experienced volatility spikes during Asian trading sessions that created arbitrage opportunities for those positioned to identify and exploit them quickly. Commodity futures markets displayed predictable patterns during overnight sessions that could be leveraged through strategic position timing. More importantly, Alexandra had begun to understand that the financial services industry was experiencing a fundamental transformation that most traditional firms were failing to address adequately. Artificial intelligence and machine learning technologies were revolutionizing trading strategies, risk management approaches, and customer service delivery. But implementation was fragmented and inefficient, because decision-makers lacked the technical expertise necessary to evaluate and deploy these technologies effectively. During her overnight shifts, Alexandra began developing proprietary software applications that addressed specific inefficiencies she observed in Meridian's trading operations. These applications were initially personal projects designed to automate routine aspects of her job responsibilities, but she quickly realized that they had significant commercial potential for broader implementation across the financial services industry. The first application addressed latency issues in trade execution that were costing the firm approximately $200,000 monthly in missed opportunities and suboptimal pricing. Alexandra's algorithm reduced execution times by 47% while improving accuracy rates by 15%, generating immediate and measurable improvements in trading performance that exceeded the cost of her annual salary within the first month of implementation. The second application focused on risk assessment and portfolio optimization, using machine learning techniques that adapted continuously to changing market conditions. Traditional risk management approaches relied on historical data and static models that failed to account for the dynamic nature of modern financial markets. Alexandra's system processed real-time data streams and adjusted risk parameters automatically, reducing portfolio volatility by 23% while maintaining return rates that exceeded benchmark performance by 8% annually. The third application addressed customer service inefficiencies that were generating significant client dissatisfaction and account attrition. Financial services customers expected immediate access to account information and rapid resolution of service issues, but existing systems were fragmented and required multiple manual processes that created delays and errors. Alexandra designed an integrated platform that consolidated customer data and automated routine service requests, reducing response times by 62% while improving accuracy rates and customer satisfaction scores significantly. These applications represented only the beginning of Alexandra's strategic development activities during her overnight shifts at Meridian Financial Services. She had identified 17 additional areas where technology improvements could generate substantial cost savings and revenue enhancements, and she had developed preliminary solutions for 12 of these opportunities. Her personal laptop contained business plans, technical specifications, and financial projections for a comprehensive technology platform that could transform operational efficiency across multiple sectors of the financial services industry. The irony of her situation was not lost on Alexandra. While her family viewed her overnight technical support role as evidence of career failure and personal inadequacy, she was actually developing intellectual property and business strategies that had the potential to generate wealth that exceeded anything her more conventionally successful siblings had achieved. The night shift position that appeared to represent professional stagnation was actually providing her with the time, access, and motivation necessary to build the foundation for extraordinary entrepreneurial success. Alexandra had learned to view her current circumstances not as limitation, but as preparation. The reduced expectations and lack of supervision during overnight hours allowed her to pursue development activities that would have been impossible in a traditional corporate environment. The financial services industry provided her with daily exposure to market dynamics and business challenges that informed her product development strategies. The apparent career setback had become an intensive entrepreneurship incubation program that was preparing her for opportunities that her critics could not even imagine. During her breaks between system monitoring responsibilities, Alexandra researched venture capital funding trends, patent application procedures, and business incorporation requirements. She had identified 3 potential funding sources for her technology platform and had begun developing presentations that demonstrated the commercial viability of her applications. Her savings account, carefully managed despite her reduced income, contained sufficient capital to support initial business development activities while she transitioned from employee to entrepreneur. The transformation was gradual but profound. Alexandra Rodriguez was no longer simply working a night shift technical support role while waiting for better employment opportunities. She was conducting intensive market research and product development activities that were positioning her to launch a technology company with significant competitive advantages and substantial growth potential. The invisible technical support specialist was becoming a visionary entrepreneur, and her apparent professional struggles were revealing themselves as strategic preparation for extraordinary success. The family dinner that would ultimately precipitate her public vindication was still months away, but Alexandra was already building the financial foundation that would enable her to respond to criticism with documentation rather than defensiveness. The bank statements that would eventually silence her detractors were growing steadily through investments and business development activities that remained invisible to those who measured success through conventional employment metrics. Her mother's harsh judgment at that future family gathering would provide the perfect opportunity to demonstrate that appearances can be profoundly deceiving, and that the daughter she considered a failure had actually been building the foundation for success that would exceed the achievements of everyone else at that dinner table. Alexandra Rodriguez was not just working the night shift. She was constructing the empire that would redefine her family's understanding of what constituted real achievement and lasting success. The fluorescent lights continued humming overhead, and the servers continued their endless digital conversations. But the woman monitoring them was no longer the same person who had accepted this position 2 years earlier. She had been transformed by necessity, prepared by adversity, and motivated by skepticism into someone capable of extraordinary achievement. The night shift had become her laboratory, and the laboratory was about to produce results that would astonish everyone who had underestimated her potential. Every keystroke, every algorithm, every late-night development session was building toward the moment when she would demonstrate that success often emerges from the most unexpected circumstances, achieved by those who refuse to allow temporary setbacks to define their permanent potential. Alexandra Rodriguez was becoming living proof that the greatest transformations often occur in darkness, invisible to those who judge based on surface appearances rather than underlying preparation and capability. The journey from underestimated technical support specialist to successful technology entrepreneur was well underway, though none of her family members would recognize the transformation until the dramatic revelation that would change their perception of her forever. The night shift was ending, but the real work was just beginning, and the results would exceed everyone's expectations except her own. Preparing and narrating this story took us a lot of time, so if you are enjoying it, subscribe to our channel. It means a lot to us. Now back to the story. The transformation of Alexandra Rodriguez from overlooked technical support specialist to covert financial architect began during her 3rd month at Meridian Financial Services, when she discovered that the company's trading algorithms contained fundamental inefficiencies that were systematically eroding profit margins across multiple investment portfolios. The revelation emerged not through formal analysis or management-directed investigation, but through her meticulous observation of system performance patterns during the quiet hours when most of the financial world slept. Working the overnight shift provided Alexandra with unprecedented access to raw trading data that revealed market behaviors invisible to conventional analysis. While day shift analysts focused on major market movements and established trading patterns, Alexandra observed the subtle inefficiencies that occurred during off-peak hours when automated systems operated with minimal human oversight. These inefficiencies represented millions of dollars in unrealized profits that were being systematically missed by firms that relied on traditional trading methodologies and outdated algorithmic approaches. The first major insight came during a particularly volatile overnight session in the foreign exchange markets, when currency fluctuations created arbitrage opportunities that lasted mere seconds but generated substantial profit potential for those positioned to exploit them. Alexandra watched Meridian's trading algorithms fail to recognize and capitalize on 17 separate arbitrage opportunities within a single 6-hour period, each representing potential profits ranging from $15,000 to $47,000 that vanished before the systems could respond appropriately. This observation catalyzed Alexandra's understanding that the financial services industry was experiencing a technological revolution that most firms were failing to navigate effectively. Artificial intelligence and machine learning capabilities had advanced dramatically, but implementation across financial institutions remained fragmented and inefficient because decision-makers lacked the technical expertise necessary to evaluate and deploy these technologies strategically. Alexandra began developing proprietary algorithms during her break periods and after completing her routine system monitoring responsibilities. Her first application addressed the latency issues that prevented Meridian's systems from capitalizing on short-duration arbitrage opportunities in currency markets. The algorithm utilized machine learning techniques to predict market movements with sufficient accuracy to position trades milliseconds before arbitrage windows opened, enabling systematic exploitation of profit opportunities that conventional systems missed entirely. The development process required intensive research into market microstructure theory, algorithmic trading strategies, and real-time data processing techniques that extended far beyond her formal computer science education. Alexandra spent her personal time studying academic papers, analyzing trading strategies employed by major investment banks, and reverse engineering successful hedge fund algorithms to understand the mathematical foundations that enabled consistent profitability in volatile markets. Her breakthrough came when she realized that most trading algorithms optimized for single variables rather than considering the complex interactions between multiple market factors that determined actual price movements. Currency exchange rates reflected not just supply and demand dynamics, but also interest rate differentials, political stability indicators, trade balance trends, and investor sentiment patterns that created predictable but subtle influences on short-term price movements. Alexandra designed an integrated algorithm that processed 17 different data streams simultaneously and identified probability-weighted scenarios for currency movements with accuracy rates that exceeded 92% for predictions within 15-minute timeframes. The algorithm generated trading signals that enabled systematic profits from arbitrage opportunities, while maintaining risk levels that met conservative institutional investment guidelines. Testing the algorithm using historical data demonstrated extraordinary performance metrics that exceeded benchmark returns by factors that seemed almost impossible to achieve consistently. The algorithm generated average monthly returns of 14.7%, while maintaining maximum drawdown levels below 3%. Performance characteristics that represented revolutionary improvements over existing institutional trading strategies. Alexandra understood that her algorithm represented intellectual property with commercial value that could transform her financial circumstances fundamentally. However, she also recognized that demonstrating the algorithm's capabilities would require capital for initial trading operations and sophisticated understanding of regulatory compliance requirements that governed proprietary trading activities within financial services firms. Rather than attempting to implement her algorithm within Meridian's existing systems, where her contributions would likely be minimized and her intellectual property rights would be uncertain, Alexandra began developing a comprehensive business plan for launching an independent algorithmic trading fund that would license her technology to institutional investors while retaining ownership of the underlying intellectual property. The business plan required extensive research into hedge fund industry structure, regulatory requirements for investment advisors, and venture capital funding sources that specialized in financial technology startups. Alexandra spent her off hours studying securities law, fund administration requirements, and performance reporting standards that would govern operations of an independent investment management firm. During this research phase, Alexandra discovered that the algorithmic trading industry was experiencing rapid consolidation as traditional hedge funds struggled to compete with technology-focused firms that could process market data more efficiently and execute trades with superior timing and accuracy. Several established investment firms had been acquired by technology companies that valued their market access more than their historical performance records. This industry trend suggested exceptional opportunities for new entrants with superior technology platforms, particularly those that could demonstrate consistent profitability across various market conditions. Alexandra's algorithm had generated positive returns during both trending and range-bound market environments, indicating robust performance characteristics that would appeal to institutional investors seeking diversification from traditional investment strategies. Alexandra began approaching potential investors through networking events for technology professionals and alumni connections from her Stanford graduate program. These initial conversations revealed strong interest in algorithmic trading strategies that could provide uncorrelated returns with limited downside risk, exactly the performance profile that her algorithm delivered consistently. The first significant investor meeting occurred with Rebecca Chen, a former Goldman Sachs managing director who had launched her own venture capital fund specializing in financial technology investments. Rebecca reviewed Alexandra's performance data and technical documentation with the expertise of someone who understood both the mathematical complexity of algorithmic trading and the business requirements for successful fund management. The meeting lasted 3 hours and concluded with Rebecca's commitment to provide initial seed funding of $2 million in exchange for equity participation in Alexandra's algorithmic trading fund. The investment would enable Alexandra to establish proper legal structure, obtain necessary regulatory approvals, and begin trading operations with sufficient capital to generate meaningful returns while maintaining appropriate risk management protocols. Alexandra realized that her apparent career setback had actually positioned her for entrepreneurial success that would have been impossible through conventional employment advancement. Working overnight shifts at a financial services firm had provided her with market access, industry knowledge, and development time that enabled her to create intellectual property with extraordinary commercial value. The transformation from technical support specialist to fund manager required intensive preparation in areas far beyond her computer science background. Alexandra enrolled in online courses covering investment management, regulatory compliance, and business administration topics that would be essential for successful fund operations. She studied for and obtained securities licenses that would authorize her to manage client investments professionally. The legal requirements for establishing an investment advisory firm proved complex and expensive, requiring specialized legal counsel and regulatory consultations that consumed significant portions of her savings account. However, Alexandra understood that proper legal structure was essential for protecting both her intellectual property rights and her future clients' interests. During the fund establishment process, Alexandra continued working her overnight shifts at Meridian Financial Services while secretly building the business infrastructure that would enable her transition to independent fund management. The contrast between her mundane daily responsibilities and her extraordinary entrepreneurial activities created cognitive dissonance that required careful compartmentalization to maintain professional performance in both contexts. Her colleagues at Meridian remained unaware of her algorithmic trading development activities or her progress toward launching an independent investment fund. To them, she appeared to be a competent but unremarkable technical support specialist who performed her duties reliably but showed no particular ambition for advancement within the organization. This perception served Alexandra's strategic interests perfectly, as it prevented questions about her activities and allowed her to continue accessing market data that informed her algorithm development without creating conflicts of interest or intellectual property disputes with her current employer. The fund launch process required 6 months of intensive preparation, during which Alexandra maintained her overnight work schedule while simultaneously managing legal compliance requirements, investor relations activities, and technology infrastructure development. The workload was exhausting, but Alexandra understood that this period of intensive effort would establish the foundation for financial independence that would transform her circumstances permanently. The official launch of Rodriguez Capital Management occurred on a quiet Tuesday morning when financial markets opened with typical volatility, but Alexandra's algorithm began generating profits that would exceed her annual salary at Meridian Financial Services within the first week of operations. The fund's performance metrics immediately attracted attention from institutional investors seeking exposure to systematic trading strategies with demonstrated profitability and limited correlation to traditional market factors. Alexandra's bank statements began reflecting investment returns that seemed impossible for someone working overnight technical support shifts, but the returns were entirely legitimate and represented the culmination of strategic preparation that had transformed apparent career limitation into extraordinary entrepreneurial opportunity. The invisible technical support specialist had become a successful hedge fund manager, though her family remained unaware of this transformation and continued to view her overnight employment as evidence of professional failure and personal inadequacy. This misperception would persist until the family dinner confrontation that would provide Alexandra with the perfect opportunity to demonstrate that appearances can be profoundly deceiving when someone possesses the vision and determination necessary to transform adversity into unprecedented success. The success of Rodriguez Capital Management's initial algorithmic trading operations created opportunities that Alexandra had not anticipated when she first launched her independent investment fund. Within 3 months of beginning operations, her systematic trading strategies had generated returns that attracted attention from institutional investors across multiple financial sectors, leading to expansion opportunities that would multiply her fund's assets under management and establish her reputation as a formidable presence in quantitative finance. Alexandra's original algorithm had focused primarily on foreign exchange arbitrage opportunities, but the mathematical frameworks she had developed proved adaptable to other financial markets with similar inefficiencies and profit potential. The success in currency markets provided proof of concept that enabled her to expand into equity derivatives, commodity futures, and fixed income securities with systematic approaches that generated consistent profits across diverse market conditions. The expansion process required sophisticated understanding of market microstructure theory and regulatory compliance requirements that varied significantly between different asset classes. Alexandra dedicated substantial time to studying the unique characteristics of each market sector, including trading hours, settlement procedures, margin requirements, and risk management protocols that would govern expanded operations. Equity derivatives markets presented particularly attractive opportunities for algorithmic trading strategies because price relationships between underlying stocks and their corresponding options contracts often diverged from theoretical fair value calculations during periods of market volatility. These divergences created systematic arbitrage opportunities that could be exploited through sophisticated mathematical models that predicted convergence timing with high probability accuracy. Alexandra developed specialized algorithms for options, market making that provided liquidity to institutional investors, while capturing bid-ask spreads and volatility risk premiums that generated steady profits, regardless of directional market movements. The algorithms utilized advanced statistical techniques to estimate probability distributions for stock price movements and dynamically adjusted option pricing to maintain profitable spreads while managing portfolio risk within conservative limits. The options market-making algorithms required real-time processing of massive data streams that included stock prices, options prices, volatility indices, interest rates, dividend expectations, and earnings announcement schedules that influenced options pricing models. Alexandra designed distributed computing systems that processed this information with latency measurements in microseconds, enabling her algorithms to respond to market opportunities faster than competing trading systems. Commodity futures markets offered different but equally profitable opportunities for systematic trading strategies. Agricultural commodities, energy products, and precious metals exhibited seasonal patterns and supply-demand imbalances that created predictable price movements. For traders with sufficient market knowledge and analytical capabilities, Alexandra's algorithms identified these patterns and positioned trades to capitalize on recurring market behaviors that less sophisticated market participants failed to recognize. The commodity trading algorithms incorporated weather data, inventory, reports, geopolitical risk assessments, and macroeconomic indicators that influenced supply-demand dynamics across different commodity sectors. This comprehensive approach enabled Alexandra's systems to predict price movements with accuracy rates that exceeded conventional fundamental analysis techniques, while maintaining systematic approaches that could be scaled across multiple commodity markets simultaneously. Fixed income markets presented additional opportunities for algorithmic trading strategies that exploited yield curve inefficiencies and credit spread anomalies that occurred during periods of market stress or unusual monetary policy environments. Alexandra developed algorithms that identified mispriced bonds and executed trades that captured yield premiums while managing duration risk and credit risk within specified parameters. The fixed income algorithms required sophisticated understanding of interest rate theory, credit analysis, and bond mathematics that Alexandra acquired through intensive self-directed study of academic literature and practitioner guides written by experienced bond traders and portfolio managers. The learning process was demanding but essential for developing trading strategies that could generate consistent profits in markets that many investors found difficult to navigate successfully. Each market expansion required additional capital for trading operations and incremental technology infrastructure that could process the increased data volumes and execute larger numbers of simultaneous trades across multiple asset classes. Alexandra obtained additional funding through private placement offerings that attracted high-net-worth individuals and institutional investors seeking exposure to systematic trading strategies with demonstrated performance records. The fund-raising process introduced Alexandra to network connections within the institutional investment community that provided valuable insights into market opportunities and potential partnerships that could accelerate business growth. Several pension funds and endowment organizations expressed interest in providing substantial capital allocations to Rodriguez Capital Management in exchange for exclusive access to certain trading strategies or preferential fee arrangements. Alexandra structured these institutional relationships carefully to maintain operational independence while accessing capital resources that enabled continued expansion of trading operations. The partnerships provided stable funding sources that reduced dependence on performance-based fee income and created more predictable cash flow patterns that supported systematic business development activities. The operational complexity of managing multiple trading strategies across different asset classes required sophisticated risk management systems and operational procedures that exceeded the capabilities of traditional investment management firms. Alexandra invested significant resources in developing proprietary risk monitoring systems that tracked portfolio exposures, correlations between different strategies, and potential scenarios that could create unexpected losses during market stress periods. The risk management systems incorporated Monte Carlo simulation techniques, stress testing methodologies, and real-time portfolio monitoring capabilities that provided comprehensive oversight of all trading activities. These systems enabled Alexandra to maintain appropriate risk levels while maximizing profit opportunities across diverse market conditions and asset classes. Technology infrastructure requirements expanded dramatically as trading operations scaled across multiple markets and time zones. Alexandra established redundant data centers in different geographic locations to ensure continuous system availability and implemented sophisticated backup procedures that could maintain trading operations. During system failures or communication disruptions, the technology investments represented substantial capital expenditures that required careful financial planning and cash flow management to maintain adequate liquidity for both trading operations and business development activities. Alexandra balanced growth investments with profitability requirements to ensure sustainable business expansion that could support long-term competitive advantages in quantitative finance. Personnel requirements also expanded as trading operations became more complex and demanding. Alexandra hired specialized staff members with expertise in quantitative analysis, software development, compliance oversight, and client relations, activities that were essential for professional fund management operations. Each hiring decision required careful evaluation of technical capabilities and cultural fit within the organization. The team development process reflected Alexandra's commitment to building sustainable competitive advantages through human capital, investments that would enable continued innovation and operational excellence. She recruited talented professionals from leading investment banks and hedge funds, who brought specialized knowledge and industry experience that complemented her technological expertise and entrepreneurial vision. Client relations activities became increasingly important as Rodriguez Capital Management attracted larger institutional investors with sophisticated due diligence requirements and ongoing reporting expectations. Alexandra developed comprehensive reporting systems that provided detailed performance attribution analysis, risk metrics, and operational transparency that exceeded industry standards for hedge fund reporting. The institutional client base included pension funds, insurance companies, family offices, and fund-of-funds organizations that allocated capital based on rigorous quantitative analysis of risk-adjusted returns and operational capabilities. These clients required detailed documentation of trading strategies, risk management procedures, and business continuity plans that demonstrated professional fund management standards. Alexandra's ability to satisfy institutional due diligence requirements while maintaining proprietary technology advantages created sustainable competitive differentiation that attracted premium fee arrangements and long-term capital commitments from sophisticated investors. The combination of superior performance and operational excellence established Rodriguez Capital Management as a preferred provider of systematic trading strategies within the institutional investment community. The financial results from expanded operations exceeded Alexandra's initial projections by substantial margins, generating investment returns that transformed her personal financial position from modest savings accumulation to significant wealth creation within a relatively short time period. The bank statements that would eventually silence her family's criticism were growing through systematic profit generation from multiple algorithmic trading strategies operating across global financial markets. Alexandra maintained strict confidentiality regarding her business activities and financial success, partly for competitive reasons and partly because she understood that premature disclosure might create unwanted attention or family dynamics that could complicate her professional relationships. The contrast between her public persona as an overnight technical support worker and her private reality as a successful hedge fund manager created tension that would eventually require resolution. The resolution would come during the family dinner confrontation that was still several months in the future, but Alexandra was systematically building the financial foundation and business credentials that would enable her to respond to criticism with documented evidence rather than defensive arguments. The silent revolution was proceeding according to strategic plans that would ultimately demonstrate that extraordinary success often emerges from the most unexpected circumstances when preparation meets opportunity and determination enables sustained execution of visionary business strategies. The pivotal transformation in Alexandra Rodriguez's journey occurred during the early months of her second year operating Rodriguez Capital Management, when a series of global financial events created unprecedented market volatility that would test every aspect of her algorithmic trading systems and establish her reputation as one of the most sophisticated quantitative fund managers in the industry. The convergence of European sovereign debt concerns, emerging market currency devaluations, and unexpected central bank policy shifts created market conditions that separated exceptional trading strategies from conventional approaches with devastating clarity. The crisis began in the early hours of a Monday morning in September, when Alexandra was monitoring overnight trading activity from her command center that she had established in a converted warehouse space in the financial district. The facility represented a significant upgrade from her previous operations, featuring state-of-the-art computing infrastructure, redundant communication systems, and real-time market data feeds from exchanges across 6 continents that enabled continuous trading operations as global markets opened and closed in sequence. European markets opened with unusual volatility patterns that Alexandra's algorithms immediately identified as representing systematic opportunities rather than random price movements. The volatility resulted from coordinated central bank interventions in currency markets that were designed to address emerging inflationary pressures, but had created unintended consequences in derivative instruments and cross-border arbitrage relationships. Alexandra watched her trading systems respond to these market conditions with precision that exceeded her most optimistic projections. The algorithms had been designed to identify and exploit exactly these types of systematic inefficiencies, but the scale and duration of the opportunities exceeded anything she had observed during previous market stress periods. Within the first 4 hours of European trading, her systems had generated profits that exceeded the fund's typical monthly performance by substantial margins. The success during European trading hours provided capital and confidence for expanded operations as Asian markets opened with similar volatility patterns. Alexandra's commodity trading algorithms identified supply chain disruption concerns in agricultural markets that created pricing anomalies between physical commodity prices and futures contracts. The algorithms executed sophisticated spread trades that captured these pricing discrepancies while managing physical delivery risk through careful position timing and contract selection. Currency markets presented additional opportunities as central bank policy divergences created exchange rate movements that exceeded normal volatility parameters. Alexandra's foreign exchange algorithms capitalized on these movements through systematic arbitrage strategies that generated profits from temporary price relationships between major currency pairs and exotic currency crosses that reflected different monetary policy environments. The combination of successful trading across multiple asset classes and geographic regions generated daily profits that approached Alexandra's previous annual salary from her technical support position. The performance demonstrated the extraordinary potential of systematic trading approaches when applied by sophisticated algorithms during optimal market conditions, validating years of research and development that had prepared her systems for exactly these circumstances. More importantly, the crisis period revealed the sustainable competitive advantages that Alexandra had developed through her unconventional preparation process. While traditional hedge funds struggled to adapt their strategies to rapidly changing market conditions, her algorithms performed optimally because they had been designed to identify and exploit the systematic inefficiencies that emerged during periods of market stress and uncertainty. The operational infrastructure that Alexandra had developed proved essential for managing the increased trading volumes and risk exposures that accompanied expanded market opportunities. Her risk management systems processed thousands of potential scenarios in real time and adjusted position sizes automatically to maintain appropriate portfolio risk levels while maximizing profit potential from identified trading opportunities. The technology investments that had seemed excessive during initial fund development now proved essential for handling the computational requirements of simultaneous trading across multiple markets with microsecond timing precision. The redundant data centers and backup communication systems ensured continuous operations despite increased market volatility and higher trading volumes that stressed conventional infrastructure capabilities. Personnel additions during the previous months enabled Alexandra's team to monitor expanded operations continuously while maintaining the analytical capabilities necessary for identifying new trading opportunities and managing existing positions effectively. The specialized staff members contributed expertise in specific market sectors that complemented Alexandra's technological innovations and strategic vision. Client communications during this period required careful balance between transparency regarding exceptional performance and confidentiality regarding proprietary trading strategies that generated competitive advantages. Alexandra provided institutional investors with detailed performance attribution analysis that demonstrated systematic profit generation rather than speculative positioning, which reinforced confidence in the fund's long-term sustainability and risk management capabilities. The exceptional performance attracted significant attention from institutional investors who had been monitoring Rodriguez Capital Management's track record and were seeking allocations to systematic trading strategies, with demonstrated resilience during market stress periods. Several large pension funds and sovereign wealth organizations initiated due diligence processes that could result in substantial capital allocations that would enable further expansion of trading operations. Alexandra realized that the crisis period represented more than exceptional trading performance. It demonstrated the viability of her comprehensive approach to quantitative finance and validated the strategic decisions that had guided her business development activities. The fund's ability to generate substantial profits during adverse market conditions while maintaining conservative risk profiles established credibility that would attract premium institutional relationships and enable sustainable competitive advantages. The financial results from the crisis period transformed Alexandra's personal wealth accumulation timeline dramatically. The combination of management fees and performance-based compensation generated income that exceeded her previous career, earnings by substantial multiples, creating financial security that enabled strategic planning for long-term business expansion and personal goals that had seemed impossible during her technical support employment. More significantly, the crisis period validated Alexandra's fundamental thesis that systematic trading approaches could generate superior risk-adjusted returns when implemented with appropriate technological infrastructure and operational sophistication. The success demonstrated that her unconventional preparation process had created genuine competitive advantages rather than temporary market anomalies that could be arbitraged away by increased competition. The validation enabled Alexandra to approach business expansion with confidence that reflected genuine competitive differentiation rather than speculative optimism. She began developing strategic plans for international expansion, additional asset class coverage, and institutional partnership opportunities that would establish Rodriguez Capital Management as a leading provider of systematic trading strategies within the global investment management industry. The international expansion plans included establishing operations in London and Hong Kong that would enable continuous trading across global time zones while providing local presence for European and Asian institutional clients. The expansion would require significant capital investments and personnel additions, but would create sustainable competitive advantages through geographic diversification and extended operating hours. Additional asset class coverage included systematic trading strategies for real estate investment trusts, infrastructure securities, and private equity secondary markets that presented similar opportunities for algorithmic approaches to identify and exploit pricing inefficiencies. These expansions would require specialized knowledge and regulatory approvals, but would provide diversification that could enhance risk-adjusted returns while reducing correlation to traditional investment strategies. Institutional partnership opportunities included strategic alliances with established investment banks and asset management firms that could provide distribution capabilities and operational infrastructure that would accelerate business growth while maintaining proprietary technology advantages. These partnerships would require careful structuring to preserve competitive differentiation while accessing complementary capabilities and client relationships. The strategic planning process required sophisticated analysis of growth opportunities, capital requirements, competitive positioning, and risk management considerations that reflected the complexity of institutional investment management operations. Alexandra dedicated substantial time to evaluating alternative expansion strategies and their implications for long-term business sustainability and competitive positioning. The planning process also required consideration of personal goals and lifestyle preferences that would be affected by rapid business expansion and increased operational complexity. Alexandra recognized that continued growth would require leadership capabilities and organizational management skills that extended beyond her technical expertise and quantitative analysis capabilities. The transformation from individual trader to institutional fund manager had already required significant personal development in areas including client relations, regulatory compliance, and team leadership that represented substantial expansions of her professional capabilities. Further growth would demand additional skill development and potential recruitment of senior management personnel with complementary expertise and industry experience. Alexandra approached these challenges with the same systematic methodology, that had enabled her success in algorithmic trading development. She identified specific areas requiring capability enhancement and developed structured learning programs that would prepare her for expanded leadership responsibilities while maintaining focus on the technological innovations that created competitive advantages. The convergence moment had revealed the extraordinary potential that could be realized when systematic preparation met optimal market conditions and determined execution enabled full capitalization of identified opportunities. Alexandra understood that similar convergence moments would occur throughout her career, and that sustained success would require continuous preparation and readiness to recognize and exploit these pivotal opportunities when they emerged. The crisis period had transformed Rodriguez Capital Management from a promising startup into an established institutional presence with demonstrated competitive advantages and substantial growth potential. More importantly, it had validated Alexandra's belief that unconventional preparation paths could create exceptional opportunities for those willing to pursue excellence, regardless of external recognition or conventional career advancement patterns. The financial foundation that would eventually silence her family's criticism had been established through systematic profit generation during the most challenging market conditions that the financial industry had experienced in recent years. The bank statements that would document her success represented genuine value creation through innovative technological applications rather than speculative positioning or temporary market advantages. The extraordinary success of Rodriguez Capital Management during the global market crisis period created opportunities that Alexandra Rodriguez had not anticipated when she first began developing algorithmic trading strategies during her overnight shifts at Meridian Financial Services. The fund's performance during adverse market conditions had attracted attention from institutional investors across multiple continents, leading to expansion opportunities that would require fundamental changes in business structure, operational complexity, and personal leadership responsibilities that extended far beyond her technical expertise. The transformation from individual quantitative trader to institutional fund manager required Alexandra to develop capabilities in areas that had not been addressed during her computer science education or her previous professional experience. In technology development, the expansion of Rodriguez Capital Management into a globally recognized institutional presence demanded sophisticated understanding of regulatory compliance requirements, client relationship management, organizational, leadership, and strategic business development that represented substantial personal and professional growth challenges. The regulatory environment for institutional investment management operations proved particularly complex and demanding, requiring specialized legal counsel and compliance systems that exceeded the requirements of initial fund establishment. Alexandra discovered that managing assets for large institutional clients involved regulatory obligations in multiple jurisdictions, each with specific reporting requirements, operational standards, and oversight procedures that demanded systematic attention and professional expertise. The compliance requirements extended beyond financial reporting to encompass operational risk management, cybersecurity protocols, and business continuity planning that reflected the sophisticated risk management expectations of institutional investors. Alexandra invested significant resources in developing comprehensive compliance systems that exceeded regulatory minimums while providing operational efficiency that supported continued business growth and competitive positioning. Client relationship management for institutional investors required capabilities that differed substantially from the technical analysis and algorithmic development that had enabled her initial success. Pension funds, sovereign wealth organizations, and family offices conducted extensive due diligence processes that evaluated not only investment performance, but also operational infrastructure, management capabilities, and long-term business sustainability factors that determined capital allocation decisions. Alexandra recognized that effective institutional client relations required communication skills that translated complex quantitative strategies into clear business value propositions that resonated with investment committees and board members, who possessed diverse professional backgrounds and varying levels of technical expertise. the ability to present sophisticated mathematical concepts in accessible terms became essential for maintaining client relationships and attracting new institutional partnerships. The organizational leadership challenges associated with rapid business expansion required Alexandra to develop management capabilities that extended beyond her individual contributions to encompass team development, strategic planning, and corporate culture formation that would enable sustained competitive advantages through human capital optimization. The transition from individual contributor to institutional leader demanded fundamental changes in daily responsibilities and long-term strategic focus. Alexandra approached these leadership challenges with the same systematic methodology that had enabled her success in algorithmic trading development. She identified specific areas requiring capability enhancement and developed structured learning programs that included executive education courses, professional mentoring relationships, and practical experience in organizational management that prepared her for expanded responsibilities while maintaining focus on technological innovation. The strategic business development opportunities that emerged from exceptional fund performance included potential partnerships with established investment banks, asset management firms, and technology companies that could provide distribution, capabilities, operational infrastructure, and specialized expertise that would accelerate business growth while preserving competitive differentiation through proprietary technology advantages. Alexandra evaluated these partnership opportunities with careful consideration of their implications for long-term business independence and competitive positioning. While external partnerships could provide immediate access to client relationships and operational capabilities, they also involved potential limitations on strategic flexibility and profit-sharing arrangements that could constrain future business development opportunities. The evaluation process required sophisticated analysis of alternative growth strategies and their implications for business valuation, operational control, and long-term strategic positioning within the institutional investment management industry. Alexandra dedicated substantial time to understanding the competitive dynamics and partnership structures that had enabled successful expansion by other quantitative fund managers, while maintaining technological advantages that created sustainable differentiation. The international expansion planning process revealed additional complexity regarding regulatory requirements, operational infrastructure, and client relationship management that varied significantly between different geographic markets. European institutional investors maintained different due diligence standards and regulatory compliance expectations compared to their American counterparts, while Asian markets presented unique cultural considerations and business relationship development approaches that required specialized knowledge and local expertise. Alexandra decided to establish international operations through strategic hiring of experienced professionals with specialized knowledge of local market conditions and regulatory requirements, rather than attempting to develop this expertise internally. This approach would enable rapid expansion while maintaining high professional standards and regulatory compliance that would satisfy sophisticated institutional investors in multiple geographic markets. The personnel recruitment process for international expansion required careful evaluation of candidates with appropriate technical expertise, institutional experience, and cultural fit within the organization that Alexandra had developed. Each hiring decision involved consideration of both immediate operational requirements and long-term strategic contributions to business development and competitive positioning objectives. The technology infrastructure requirements for international operations demanded significant capital investments in data centers, communication systems, and backup capabilities that would ensure continuous operations across multiple time zones, while maintaining the microsecond timing precision that enabled competitive advantages in systematic trading strategies. The infrastructure investments represented substantial financial commitments that required careful cash flow planning and risk management consideration. Alexandra recognized that the scale and complexity of international expansion would require external funding sources that could provide capital for infrastructure development while enabling continued independence in strategic decision-making and operational management. The funding process would involve detailed evaluation by potential investors who would require comprehensive documentation of business strategies, competitive advantages, and long-term growth projections. The preparation of funding documentation required Alexandra to articulate her vision for Rodriguez Capital Management in terms that would resonate with sophisticated institutional investors while maintaining confidentiality regarding proprietary trading strategies and technological innovations that created competitive advantages. The balance between transparency and confidentiality proved challenging but essential for attracting appropriate funding partners while preserving competitive differentiation. The funding process introduced Alexandra to network connections within the institutional investment community that provided valuable insights into industry trends, competitive dynamics, and strategic opportunities that could influence long-term business development planning. These relationships expanded her understanding of the institutional investment management industry beyond technical trading strategies to encompass broader business considerations and strategic positioning factors. The successful completion of funding arrangements provided capital resources that enabled continued expansion while validating external assessments of Rodriguez Capital Management's competitive positioning and growth potential within the institutional investment management industry. The funding process demonstrated market recognition of the value that Alexandra had created through systematic approach to quantitative trading and institutional business development. The transformation of Rodriguez Capital Management from individual trading operation to institutional investment management firm required Alexandra to develop organizational systems and management processes that could support continued growth, while maintaining the technological innovation and operational excellence that had enabled initial success. The systematic approach that had guided her algorithmic development proved equally effective for organizational development and strategic business planning. The organizational development process included establishment of advisory boards with experienced industry professionals who could provide strategic guidance and network connections that would support continued business expansion. The advisory relationships provided access to institutional knowledge and industry expertise that complemented Alexandra's technological capabilities and entrepreneurial vision. The personal transformation required for institutional leadership, roles extended beyond professional capability development to encompass lifestyle changes and personal relationship management that reflected increased visibility and responsibility within the financial services industry. Alexandra recognized that her success had created opportunities, but also obligations that would influence her personal choices and long-term goals. The financial results from Rodriguez Capital Management's continued expansion generated personal wealth accumulation that exceeded Alexandra's initial projections by substantial margins. The combination of management fees, performance-based compensation, and equity appreciation in the fund management business created financial security that enabled strategic planning for personal goals and family considerations that had been deferred during the initial business development period. The wealth accumulation also created opportunities for philanthropic activities and community contributions that reflected Alexandra's commitment to supporting educational opportunities and entrepreneurial development for individuals from backgrounds similar to her own experiences. The foundation for these activities had been established through systematic profit generation and strategic business development that created sustainable competitive advantages in institutional investment management. The convergence of professional success and personal financial security provided Alexandra with confidence that would enable her to address family criticism with documented evidence rather than defensive arguments. The bank statements that would eventually silence her detractors represented genuine value creation through innovative business development rather than temporary market advantages or speculative positioning. The journey from overnight technical support specialist to institutional fund manager had required courage to cross invisible boundaries that separated conventional career advancement from entrepreneurial opportunity creation. Alexandra's willingness to pursue excellence regardless of external recognition had created competitive advantages that generated extraordinary financial results and established her reputation as a sophisticated institutional investment professional. The transformation process had validated Alexandra's fundamental belief that systematic preparation and determined execution could create opportunities that exceeded conventional career limitations when combined with technological innovation and strategic business development. The success had been achieved through disciplined approach to capability development rather than speculative risk-taking or temporary market advantages. The foundation for continued growth had been established through systematic approach to organizational development and strategic positioning that would enable sustained competitive advantages in the institutional investment management industry. The courage to cross invisible boundaries had created opportunities that would continue expanding as Rodriguez Capital Management developed into a globally recognized institutional presence with demonstrated technological advantages and operational excellence. The culmination of Alexandra Rodriguez's transformation from underestimated technical support specialist to globally recognized institutional fund manager reached a critical juncture during the spring of her third year operating Rodriguez Capital Management, when a confluence of external recognition and internal achievement created circumstances that would fundamentally alter her relationship with both the financial services industry and her personal family dynamics. The moment of truth had arrived through channels that she had not anticipated, but had been systematically preparing for through years of disciplined excellence and strategic business development. The recognition began with an unexpected invitation to present her algorithmic trading methodologies at the prestigious Institutional Investor Alternative Investment Summit in New York, an annual conference that attracted the most sophisticated pension fund managers, endowment officers, and sovereign wealth fund executives from across the global investment management industry. The invitation represented acknowledgement by industry leadership that Rodriguez Capital Management had achieved institutional credibility that warranted serious attention from the largest and most demanding institutional investors worldwide. Alexandra understood that the presentation opportunity represented more than professional recognition. It constituted validation that her unconventional preparation process had created competitive advantages that exceeded the capabilities of traditional hedge fund management approaches. The invitation indicated that her systematic trading strategies and operational infrastructure had achieved institutional standards that satisfied the most rigorous due diligence requirements of sophisticated investors with assets measured in hundreds of billions of dollars. The preparation process for the institutional presentation required Alexandra to distill years of complex quantitative research and algorithmic development into clear strategic frameworks that would resonate with investment committees and board members who possessed diverse professional backgrounds and varying levels of technical expertise. The challenge involved communicating sophisticated mathematical concepts and technological innovations in accessible terms that demonstrated clear business value propositions without revealing proprietary information that created competitive advantages. Alexandra approached the presentation preparation with the same systematic methodology that had guided her algorithmic development and business expansion activities. She analyzed successful presentations by respected industry leaders to understand communication strategies that effectively translated complex, quantitative approaches into compelling investment narratives that attracted institutional capital allocations and long-term partnership opportunities. The presentation development process revealed the extent to which her expertise had evolved beyond individual technical capabilities to encompass comprehensive understanding of institutional investment management requirements, competitive positioning, strategies, and industry trends that influenced capital allocation decisions across multiple asset classes and geographic regions. The transformation from individual contributor to industry thought leader represented fundamental changes in professional identity and strategic positioning within the financial services ecosystem. The conference presentation itself exceeded Alexandra's expectations regarding audience engagement and subsequent business development opportunities. Her systematic approach to quantitative trading resonated with institutional investors who had been seeking alternatives to traditional hedge fund strategies that had produced disappointing risk-adjusted returns during recent market cycles, characterized by increased volatility and reduced correlation benefits from conventional diversification approaches. The presentation attracted immediate attention from several large pension funds and sovereign wealth organizations that initiated detailed due diligence processes for potential capital allocations that could exceed the current size of Rodriguez Capital Management by substantial multiples. The institutional interest validated Alexandra's strategic positioning and created expansion opportunities that would require careful evaluation of growth management and operational scalability considerations. More significantly, the presentation generated invitations for additional speaking opportunities at industry conferences and academic symposiums, where Alexandra could share her research findings and methodological innovations with broader audiences of quantitative finance professionals and institutional investment practitioners. These opportunities established her reputation as a thought leader, whose contributions extended beyond individual fund management to encompass broader advancement of systematic trading methodologies and risk management techniques. The academic recognition proved particularly meaningful to Alexandra, as several prestigious universities extended invitations for guest lectures and research collaboration opportunities that would enable her to contribute to the theoretical foundations that guided practical applications of quantitative finance techniques. The academic engagement provided intellectual satisfaction that complemented the financial success of her business operations, while establishing connections that could influence future research directions and talent development initiatives. The media attention that accompanied her conference presentations and academic involvement generated profile coverage in leading financial publications that established Alexandra as a prominent voice within the alternative investment management industry. The media coverage attracted additional institutional investor interest while raising her professional profile within the broader financial services community, beyond quantitative trading specialists and hedge fund managers. The increased visibility created networking opportunities with senior executives from major financial institutions who expressed interest in potential partnership arrangements that could provide distribution capabilities and operational infrastructure for continued business expansion. Alexandra evaluated these opportunities carefully to identify arrangements that would accelerate growth while preserving the competitive advantages and operational independence that had enabled her success. The partnership evaluation process required sophisticated analysis of strategic alternatives and their implications for long-term business development, competitive positioning, and personal professional goals that extended beyond immediate financial considerations. Alexandra recognized that partnership decisions would influence the trajectory of Rodriguez Capital Management for years to come, and demanded careful consideration of all relevant factors and potential consequences. The institutional recognition and media attention also created opportunities for board positions and advisory relationships with established financial services firms and emerging technology companies that were developing applications for institutional investment management. These opportunities provided additional revenue sources while expanding Alexandra's network connections and industry knowledge beyond her core expertise in algorithmic trading and quantitative analysis. The board positions and advisory relationships required time commitments that needed to be balanced against the operational requirements of Rodriguez Capital Management and her personal goals for continued business expansion and capability development. Alexandra approached these opportunities strategically to identify arrangements that would provide maximum value for time invested while supporting her long-term professional development and business growth objectives. The financial results from Rodriguez Capital Management's continued success during this period of increased recognition generated personal wealth accumulation that exceeded Alexandra's initial projections by extraordinary margins. The combination of management fees, performance-based compensation, and equity appreciation in the fund management business created financial security that enabled strategic planning for personal goals and philanthropic activities that reflected her commitment to supporting educational opportunities and entrepreneurial development. The wealth accumulation also provided financial independence that eliminated concerns about family approval or external validation that had influenced her decisions during earlier career stages. Alexandra recognized that her success had created opportunities to pursue activities and relationships based on personal values and strategic objectives, rather than financial necessity or social expectations that had previously constrained her choices. The transformation of her relationship with financial security created psychological freedom that enabled Alexandra to approach family interactions with confidence rather than defensiveness regarding her career choices and professional achievements. The bank statements that documented her success represented genuine value creation that could not be dismissed or minimized by those who had previously questioned her potential or criticized her unconventional career path. The preparation for eventual family confrontation did not require defensive positioning or argumentative strategies, because Alexandra's achievements spoke definitively through documented financial results and industry recognition that validated her strategic decisions and professional capabilities. The transformation from criticized family member to successful entrepreneur had been achieved through systematic excellence rather than vindictive motivation or external validation seeking. The institutional recognition that Alexandra had achieved extended beyond personal success to encompass contributions that advanced the broader quantitative finance industry through methodological innovations and operational excellence that set new standards for systematic trading approaches and risk management techniques. Her success demonstrated the potential for individual innovation to create industry-wide improvements when combined with disciplined execution and strategic business development. The network connections and industry relationships that emerged from increased recognition provided foundations for continued growth and expansion opportunities that would enable Rodriguez Capital Management to maintain competitive advantages while scaling operations to accommodate larger institutional capital allocations and more complex trading strategies across multiple asset classes and geographic regions. The moment of truth had arrived through systematic preparation and consistent excellence rather than sudden breakthrough or fortunate timing, validating Alexandra's fundamental approach to capability development and strategic positioning within the institutional investment management industry. The recognition represented acknowledgement of sustainable competitive advantages rather than temporary performance anomalies or market timing advantages that could be replicated by competitors. With sufficient resources, the foundation for continued success had been established through a comprehensive approach to business development that encompassed technological innovation, operational excellence, and institutional relationship management that created multiple barriers to competitive replication while providing platforms for sustained growth and industry leadership. The moment of truth had demonstrated that exceptional preparation and determined execution could create extraordinary opportunities when applied systematically over extended time periods. The transformation from invisible technical support specialist to recognized industry leader had been completed through disciplined approach to professional development that exceeded conventional career advancement strategies while creating sustainable, competitive advantages that would support continued success regardless of market conditions or competitive pressures. Alexandra Rodriguez had achieved the recognition that validated years of strategic preparation and positioned her for continued growth as a leader within the global institutional investment management industry. The extraordinary recognition that Alexandra Rodriguez had achieved within the institutional investment management industry created complex challenges regarding the management of her dual identities as both a globally respected hedge fund manager and a family member who remained perceived as professionally unsuccessful by those closest to her personal life. The disparity between her public achievements and private family relationships required sophisticated navigation strategies that would enable her to maintain authentic personal connections while protecting the competitive advantages and professional relationships that had enabled her remarkable success. The complexity of maintaining dual identities became particularly evident during the months following her presentation at the Institutional Investor Alternative Investment Summit, when Rodriguez Capital Management experienced unprecedented growth in assets under management that required immediate expansion of operational infrastructure, personnel recruitment, and regulatory compliance systems. The business demands associated with managing institutional capital allocations exceeding $2 billion created time pressures and responsibility levels that fundamentally altered her daily routine and long-term strategic planning considerations. Alexandra recognized that the successful management of rapid business expansion would require organizational capabilities that extended far beyond her individual contributions to encompass comprehensive leadership development, strategic delegation, and institutional partnership management that could sustain competitive advantages while accommodating the operational complexity associated with managing assets for the world's largest and most sophisticated institutional investors. The organizational development process required Alexandra to recruit senior management personnel with specialized expertise in areas including regulatory compliance, client relationship management, operations oversight, and strategic business development that would complement her technological innovations and quantitative analysis capabilities. Each recruitment decision involved careful evaluation of candidates with appropriate technical qualifications and cultural alignment with the performance-oriented environment that had enabled Rodriguez Capital Management's exceptional results. The personnel expansion process revealed the extent to which Alexandra's leadership capabilities had evolved beyond individual technical excellence to encompass comprehensive understanding of organizational dynamics, talent development, and strategic positioning that enabled sustainable competitive advantages through human capital optimization. The transformation from individual contributor to institutional leader represented fundamental changes in daily responsibilities and long-term professional identity that required continuous adaptation and capability enhancement. The regulatory compliance requirements associated with managing assets for large institutional clients demanded sophisticated legal counsel and operational procedures that exceeded the complexity of initial fund establishment requirements. Alexandra discovered that institutional investment management involved oversight obligations across multiple jurisdictions, each with specific reporting standards, operational requirements, and fiduciary responsibilities that required systematic attention and professional expertise that extended far beyond quantitative trading strategies. The compliance infrastructure development required significant capital investment in systems and personnel that could provide comprehensive oversight while maintaining the operational efficiency and technological advantages that had enabled competitive differentiation within the institutional investment management industry. Alexandra balanced compliance requirements with operational effectiveness to ensure continued competitive positioning while satisfying the sophisticated risk management expectations of institutional investors. The client relationship management requirements for institutional investors proved substantially more complex and demanding than the technical analysis and algorithmic development that had enabled her initial success. Pension funds, sovereign wealth organizations, and endowment institutions conducted ongoing oversight activities that evaluated not only investment performance, but also operational infrastructure, strategic positioning, and long-term sustainability, factors that influenced continued capital allocation decisions and partnership development opportunities. Alexandra developed comprehensive client communication systems that provided detailed performance attribution analysis, risk management documentation, and strategic outlook presentations that exceeded industry standards for institutional reporting. While maintaining confidentiality regarding proprietary trading strategies and technological innovations that created competitive advantages, the balance between transparency and confidentiality required sophisticated communication strategies that satisfied client requirements while preserving competitive differentiation. The international expansion activities that had been initiated during previous growth phases reached implementation stages that required Alexandra to establish operational presence in London and Hong Kong, that would enable continuous trading across global time zones while providing local client service capabilities. For European and Asian institutional investors, the expansion required significant capital investment and personnel recruitment while maintaining the technological infrastructure and operational standards that had enabled competitive advantages in North American markets. The international operations development required specialized knowledge of local regulatory requirements, market structures, and business relationship management approaches that varied significantly between different geographic regions. Alexandra recruited experienced professionals with appropriate local expertise while maintaining organizational culture and operational standards that could support continued competitive positioning and client satisfaction across multiple jurisdictions simultaneously. The technology infrastructure requirements for international operations demanded comprehensive systems integration and redundancy planning that would ensure continuous operations while maintaining the microsecond timing precision that enabled competitive advantages in systematic trading strategies. The infrastructure investments represented substantial financial commitments that required careful capital allocation planning while supporting the operational scalability necessary for continued business expansion and competitive positioning. The strategic partnership opportunities that emerged from increased industry recognition included potential alliances with established investment banks, asset management firms, and technology companies that could provide distribution capabilities, operational infrastructure, and specialized expertise that would accelerate business growth while preserving competitive differentiation through proprietary technology advantages and operational excellence. Alexandra evaluated these partnership opportunities with comprehensive analysis of their implications for long-term business independence, competitive positioning, and strategic flexibility within the institutional investment management industry. The evaluation process required sophisticated understanding of industry dynamics and partnership structures that had enabled successful expansion by other quantitative fund managers, while maintaining technological advantages that created sustainable differentiation. The media attention and industry recognition that accompanied Rodriguez Capital Management's continued success created opportunities for thought leadership development through speaking engagements, academic collaboration, and publication activities that could enhance professional reputation while contributing to broader advancement of quantitative finance methodologies and institutional investment management practices. Alexandra approached these thought leadership opportunities strategically to maximize professional development and network expansion, while maintaining focus on operational excellence and competitive positioning that enabled continued business success. The balance between external engagement and internal operational requirements demanded careful time management and strategic prioritization that supported long-term business objectives while building industry relationships that could facilitate continued growth and expansion opportunities. The financial results from Rodriguez Capital Management's continued expansion generated personal wealth accumulation that created opportunities for philanthropic activities and community contributions that reflected Alexandra's commitment to supporting educational advancement and entrepreneurial development for individuals from backgrounds similar to her own experiences. The foundation development activities required strategic planning and administrative infrastructure that could provide effective program delivery while maintaining focus on primary business responsibilities. The philanthropic activities included scholarship programs for underrepresented students pursuing advanced education in quantitative fields, mentorship initiatives for early career professionals in financial services, and entrepreneurship support programs that provided funding and guidance for innovative technology applications within investment management and related industries. These activities provided personal satisfaction while creating network connections and community relationships that complemented professional business development objectives. The wealth accumulation also provided financial security that eliminated concerns about family approval or external validation that had influenced previous career decisions and personal relationship management strategies. Alexandra recognized that her success had created independence that enabled authentic relationship development based on personal values and mutual respect, rather than financial dependency or social obligation that had previously constrained family interactions and personal choices. The preparation for eventual family confrontation did not require defensive positioning or argumentative strategies, because Alexandra's achievements represented documented value creation that could not be dismissed or minimized by those who lacked understanding of institutional investment management or quantitative finance methodologies. The transformation from criticized family member to successful entrepreneur had been achieved through systematic excellence rather than vindictive motivation or external validation seeking. The dual identity management challenges that Alexandra faced reflected broader issues within professional achievement and personal relationship development that affect many individuals who experience significant career advancement or entrepreneurial success that exceeds the expectations or understanding of family members and childhood communities. The navigation of these challenges required emotional intelligence and relationship management capabilities that complemented professional competencies while maintaining authentic personal connections. Alexandra developed communication strategies that enabled her to share appropriate information about her professional achievements while respecting the different perspectives and value systems that influenced family members' understanding of success and career fulfillment. The approach balanced honesty regarding her accomplishments with sensitivity toward different definitions of professional achievement and personal satisfaction that characterized various family members' career experiences and life choices. The bridge between her professional world and personal relationships required continuous management and strategic consideration that reflected the complexity of maintaining authentic connections across significantly different environments and value systems. Alexandra understood that the eventual revelation of her success would require careful handling to preserve family relationships while establishing appropriate recognition of her achievements and professional capabilities. The foundation for successful integration of her dual identities had been established through comprehensive approach to personal development that encompassed both professional excellence and emotional intelligence that could support authentic relationship management across diverse environments and relationship contexts. The bridge between worlds had been constructed through systematic preparation that would enable effective navigation of the complex dynamics that would emerge when her professional success became visible to family members who had underestimated her potential and criticized her career choices. The extraordinary success that Rodriguez Capital Management had achieved within the institutional investment management industry attracted increasing scrutiny from competitors, regulators, and industry observers who questioned whether the fund's exceptional performance could be sustained over extended periods or represented temporary advantages that would diminish as market conditions evolved and competitive pressures intensified. The scrutiny created systematic challenges that tested every aspect of Alexandra Rodriguez's operational infrastructure, strategic positioning, and leadership capabilities during a critical period when the fund was managing unprecedented asset levels for the world's most demanding institutional investors. The competitive challenges emerged from established hedge fund managers who possessed substantially greater resources, longer track records, and more extensive institutional relationships than Rodriguez Capital Management, despite their inability to match the consistent risk-adjusted returns that Alexandra's systematic trading strategies had generated across multiple market cycles and asset classes. The competitive pressure manifested through aggressive client solicitation efforts, media campaigns questioning the sustainability of quantitative trading approaches, and strategic initiatives designed to replicate or undermine the technological advantages that had enabled Rodriguez Capital Management's exceptional performance. Alexandra recognized that these competitive challenges represented validation of her fund's success rather than threats to its continued viability, but she understood that maintaining competitive advantages would require continuous innovation and operational excellence that exceeded the capabilities of larger but less technologically sophisticated competitors. The response to competitive pressure demanded strategic thinking that balanced defensive positioning with offensive initiatives that could extend competitive differentiation while accommodating the operational complexity associated with managing assets exceeding $3 billion. The defensive positioning required comprehensive intellectual property protection strategies that safeguarded the proprietary algorithms and trading methodologies that created competitive advantages while enabling continued research and development, activities that could maintain technological leadership within the quantitative finance industry. Alexandra invested significant resources in patent applications, trade secret protection protocols, and cybersecurity infrastructure that could prevent unauthorized access to proprietary information while supporting continued innovation and development. Activities. The offensive initiatives focused on accelerating research and development activities that could extend competitive advantages through breakthrough innovations in artificial intelligence applications, alternative data integration, and risk management methodologies that exceeded the capabilities of conventional hedge fund management approaches. Alexandra expanded her research team with specialized professionals who possessed advanced degrees in machine learning, behavioral finance, and computational mathematics that could contribute to continued technological leadership within quantitative trading strategies. The regulatory scrutiny that accompanied rapid asset growth and exceptional performance created compliance challenges that required sophisticated legal counsel and operational procedures that exceeded the complexity of previous regulatory requirements. Financial regulators expressed particular interest in understanding the risk management methodologies and systematic trading approaches that enabled consistent profitability while maintaining conservative portfolio risk characteristics that satisfied institutional investment guidelines across multiple jurisdictions. Alexandra approached regulatory engagement with comprehensive transparency regarding operational procedures and risk management methodologies, while maintaining appropriate confidentiality regarding proprietary trading strategies and technological innovations that created competitive advantages. The regulatory compliance approach demonstrated that Rodriguez Capital Management's exceptional performance resulted from systematic risk management and technological innovation rather than excessive risk-taking or regulatory arbitrage strategies that could threaten investor capital or financial system stability. The regulatory review process validated the sophistication of Alexandra's risk management systems and operational infrastructure, while establishing industry recognition that Rodriguez Capital Management maintained institutional standards that exceeded regulatory requirements across multiple jurisdictions. The validation provided competitive advantages through regulatory endorsement while eliminating potential concerns among institutional investors regarding compliance capabilities and operational risk management procedures. The operational challenges associated with managing assets exceeding $3 billion required systematic expansion of infrastructure, personnel, and technological capabilities that could accommodate continued growth while maintaining the precision timing and risk management capabilities that enabled competitive advantages in systematic trading strategies. The operational scaling demanded comprehensive project management and systems integration that tested Alexandra's organizational leadership capabilities while requiring substantial capital investment in technology and personnel resources. Alexandra addressed these operational challenges through systematic capacity planning and infrastructure development that anticipated future growth requirements while maintaining operational efficiency and competitive positioning within the institutional investment management industry. The capacity planning process required sophisticated analysis of growth trajectories, resource requirements, and technological capabilities that could support continued expansion while preserving the competitive advantages that had enabled exceptional performance. The personnel expansion required recruitment of senior professionals with specialized expertise in institutional client management, regulatory compliance, and operational oversight that could complement Alexandra's technological innovations and strategic vision while maintaining organizational culture and performance standards that had enabled competitive differentiation. Each recruitment decision involved comprehensive evaluation of technical qualifications, cultural alignment, and long-term contribution potential that could support sustained competitive advantages. The technology infrastructure expansion required comprehensive systems architecture planning and implementation that could accommodate increased trading volumes, enhanced data processing requirements, and expanded client reporting capabilities, while maintaining the microsecond timing, precision, and redundancy characteristics that enabled competitive advantages in systematic trading strategies. The infrastructure investments represented substantial financial commitments that required careful capital allocation planning, while supporting operational scalability that could accommodate continued business expansion. The client relationship management challenges that emerged from rapid asset growth required sophisticated communication strategies and service delivery capabilities that could satisfy the diverse requirements of institutional investors with varying risk management protocols, reporting expectations, and strategic objectives. Alexandra developed comprehensive client service systems that provided customized reporting and communication approaches while maintaining operational efficiency and competitive positioning within the institutional investment management industry. The strategic positioning challenges that accompanied increased industry visibility required careful balance between thought leadership development and competitive information protection that could maintain technological advantages while building industry relationships and client development opportunities. Alexandra approached these challenges through selective engagement with industry conferences, academic institutions, and media organizations that could enhance professional reputation while preserving proprietary information and competitive differentiation. The breakthrough that resolved these systematic challenges emerged from Alexandra's recognition that sustainable competitive advantages required continuous innovation and operational excellence rather than defensive positioning or incremental improvements within existing frameworks. The breakthrough involved comprehensive strategic repositioning that leveraged Rodriguez Capital Management's technological advantages and operational capabilities to create new market opportunities while maintaining competitive differentiation within traditional institutional investment management services. The strategic repositioning included development of proprietary technology platforms that could be licensed to other institutional investment managers while maintaining competitive advantages through continued innovation and enhanced capabilities that exceeded the technological resources available to conventional hedge fund management organizations. The licensing approach generated additional revenue streams while creating barriers to competitive replication through technological leadership and intellectual property protection. The breakthrough also included expansion into adjacent market opportunities that could leverage Rodriguez Capital Management's technological capabilities and institutional relationships while providing diversification that reduced dependence on traditional hedge fund management activities. The expansion opportunities included institutional consulting services, technology development partnerships, and strategic advisory relationships that could enhance competitive positioning while generating additional revenue sources and business development opportunities. The resolution of systematic challenges through strategic innovation and operational excellence validated Alexandra's fundamental approach to business development and competitive positioning within the institutional investment management industry. The breakthrough demonstrated that sustainable success required continuous adaptation and capability enhancement, rather than defensive positioning or reliance on temporary competitive advantages that could be replicated by competitors with sufficient resources and determination. The financial results from successful navigation of systematic challenges generated continued asset growth and institutional recognition that established Rodriguez Capital Management as a permanent presence within the global institutional investment management industry. The success created foundations for continued expansion and strategic development that could support long-term competitive advantages while accommodating the operational complexity associated with managing assets for the world's largest and most sophisticated institutional investors. The personal satisfaction that Alexandra derived from overcoming systematic challenges through strategic innovation and operational excellence exceeded the financial rewards associated with continued business success. The experience validated her commitment to continuous improvement and technological leadership, while demonstrating that exceptional performance could be sustained through disciplined approach to capability development and competitive positioning within dynamic industry environments. The breakthrough period established precedents for addressing future challenges through systematic analysis and strategic innovation rather than defensive positioning or incremental improvements within existing operational frameworks. Alexandra had demonstrated that sustainable competitive advantages required continuous evolution and capability enhancement that could anticipate and address competitive pressures while maintaining technological leadership and operational excellence that exceeded industry standards. The successful resolution of systematic challenges that had threatened Rodriguez Capital Management during its rapid growth phase created unprecedented opportunities for Alexandra Rodriguez to extend her influence beyond individual fund management into broader transformation of quantitative finance methodologies and institutional investment management practices. The breakthrough innovations that had enabled her fund to overcome competitive pressures and regulatory scrutiny established technological capabilities that possessed significant commercial value for other institutional investment managers seeking to enhance their systematic trading approaches and risk management procedures. Alexandra recognized that her technological innovations and operational methodologies represented intellectual property assets that extended far beyond the specific applications within Rodriguez Capital Management to encompass comprehensive frameworks that could revolutionize institutional investment management practices across multiple asset classes and geographic regions. The realization prompted strategic evaluation of expansion opportunities that could leverage her competitive advantages while creating additional revenue streams and establishing industry leadership positions that would sustain long-term competitive differentiation. The expansion strategy focused on developing technology licensing arrangements with established institutional investment managers who possessed substantial client relationships and operational infrastructure, but lacked the technological capabilities necessary to compete effectively with systematic trading approaches that utilized artificial intelligence and machine learning methodologies. These licensing arrangements would provide other firms with access to sophisticated algorithmic trading capabilities while generating substantial revenue for Rodriguez Capital Management through technology transfer agreements that preserved competitive advantages through continued innovation and development activities. The technology licensing development process required comprehensive legal frameworks and intellectual property protection strategies that could safeguard proprietary algorithms and methodologies while enabling controlled distribution to carefully selected institutional partners. Alexandra invested significant resources in patent applications, trade secret protection protocols, and licensing agreement structures that would generate substantial revenue while maintaining technological leadership and competitive differentiation within the quantitative finance industry. The initial licensing agreements were negotiated with 3 established institutional investment managers who possessed combined assets under management exceeding $50 billion, but had struggled to develop internal capabilities for systematic trading strategies that could compete effectively with specialized quantitative hedge funds. The licensing arrangements provided these firms with immediate access to sophisticated algorithmic trading capabilities while generating annual licensing fees exceeding $20 million for Rodriguez Capital Management. The success of initial technology licensing arrangements attracted attention from additional institutional investment managers who recognized the competitive advantages that systematic trading capabilities could provide within increasingly efficient financial markets. That demanded technological innovation for sustained profitability. The demand for technological solutions created expansion opportunities that could transform Rodriguez Capital Management from individual hedge fund management into comprehensive technology platform development for institutional investment applications. Alexandra approached these expansion opportunities with systematic analysis of market demand, competitive positioning, and resource requirements that could support sustainable growth while maintaining technological leadership and operational excellence within quantitative finance applications. The analysis revealed substantial market opportunities for institutional technology solutions that exceeded the revenue potential of traditional hedge fund management, while providing diversification that could reduce business risk and enhance long-term sustainability. The technology platform development required significant expansion of research and development capabilities through recruitment of specialized professionals with advanced expertise in artificial intelligence applications, distributed computing, systems, and institutional investment management requirements. Alexandra established dedicated technology development divisions that could support both internal algorithmic trading operations and external licensing activities, while maintaining intellectual property protection and competitive differentiation. The research and development expansion included establishment of strategic partnerships with leading academic institutions that possessed specialized expertise in quantitative finance research and machine learning applications that could contribute to continued technological advancement. The academic partnerships provided access to cutting-edge research and talented graduates, while creating opportunities for collaborative research projects that could enhance competitive positioning within systematic trading methodologies. The academic collaboration activities included joint research projects with Stanford University, Massachusetts Institute of Technology, and University of Chicago that focused on breakthrough applications of artificial intelligence in financial markets, risk management optimization, and alternative data integration that could create next-generation systematic trading capabilities. The collaborative research generated intellectual property assets that could be commercialized through technology licensing, while advancing the theoretical foundations of quantitative finance methodologies. The institutional consulting services development represented another significant expansion opportunity that could leverage Alexandra's demonstrated expertise in systematic trading implementation and operational infrastructure development. Large institutional investors increasingly sought consulting services that could help them evaluate and implement quantitative trading capabilities while maintaining appropriate risk management and regulatory compliance procedures. The consulting services required development of comprehensive methodologies and service delivery capabilities that could address diverse client requirements while maintaining confidentiality regarding proprietary technological innovations and competitive advantages. Alexandra established specialized consulting divisions that could provide institutional clients with strategic advisory services while generating substantial professional fees and establishing additional client relationships that could support long-term business development. The consulting assignments included strategic reviews for major pension funds and sovereign wealth organizations that sought to enhance their internal investment management capabilities through systematic trading applications and risk management improvements. The consulting engagements provided opportunities to demonstrate Rodriguez Capital Management's technological capabilities while generating professional fees exceeding $5 million annually and establishing strategic relationships with institutional investors who could become future clients or partners. The thought leadership development activities that accompanied business expansion included regular speaking engagements at industry conferences, publication of research articles in academic journals, and participation in regulatory advisory committees that influenced policy development for institutional investment management oversight. These activities enhanced Alexandra's professional reputation while establishing industry recognition that supported business development and competitive positioning objectives. The media engagement strategy focused on selective participation in interviews and articles that could demonstrate thought leadership, while maintaining appropriate confidentiality regarding proprietary technological innovations and competitive advantages. Alexandra developed comprehensive media relations capabilities that could communicate complex quantitative concepts to diverse audiences while preserving intellectual property protection and competitive differentiation within the institutional investment management industry. The international expansion activities that had been initiated during previous growth phases achieved full operational status with establishment of offices in London and Hong Kong that provided continuous trading capabilities across global time zones while offering local client service for European and Asian institutional investors. The international operations generated substantial revenue growth while establishing global presence that enhanced competitive positioning and client development opportunities. The regulatory engagement activities included participation in industry advisory committees and consultation processes that influenced policy development for systematic trading oversight and institutional investment management regulation. The regulatory involvement demonstrated thought leadership while establishing professional relationships with policymakers who could influence future regulatory environments that would affect quantitative finance applications and institutional investment management practices. The philanthropic initiative development represented an important component of Alexandra's expanding influence within the broader financial services community and academic research environment. The charitable activities included establishment of scholarship programs for underrepresented students pursuing advanced education in quantitative fields, funding for research projects that could advance theoretical understanding of systematic trading methodologies, and mentorship programs for early career professionals seeking to develop expertise in quantitative finance applications. The scholarship programs provided financial support for talented students who possessed the mathematical and computational capabilities necessary for quantitative finance careers, but lacked the financial resources to pursue advanced education at leading academic institutions. The programs established partnerships with universities that offered specialized quantitative finance degree programs, while creating pipeline relationships that could support future talent recruitment for Rodriguez Capital Management and its technology licensing partners. The research funding initiatives supported academic projects that could advance theoretical understanding of artificial intelligence applications in financial markets, risk management optimization techniques, and market microstructure analysis that would inform continued technological development and competitive positioning within systematic trading methodologies. The research support generated intellectual property assets while establishing academic relationships that could contribute to long-term technological leadership and innovation capabilities. The mentorship programs provided career development, support for professionals who sought to transition into quantitative finance careers, or enhance their existing capabilities in systematic trading applications and institutional investment management. The mentorship activities established professional networks and industry relationships, while contributing to broader advancement of quantitative finance expertise and technological innovation within the institutional investment management industry. The comprehensive expansion of Alexandra's influence across multiple dimensions of the institutional investment management industry established foundations for sustained competitive advantages and long-term business growth that extended far beyond traditional hedge fund management activities. The diversified revenue streams and strategic positioning created business sustainability that could accommodate market cycles and competitive pressures while maintaining technological leadership and operational excellence. The financial results from expanded business activities generated continued wealth accumulation that provided resources for additional strategic investments and philanthropic activities, while establishing financial security that eliminated concerns about external validation or family approval regarding career choices and professional achievements. The documented success represented genuine value creation that would support eventual family interactions with confidence rather than defensiveness regarding professional capabilities and strategic positioning within the institutional investment management industry. The transformation of Alexandra Rodriguez from individual high performer to industry catalyst reached its most profound expression through her systematic commitment to empowering others who possessed exceptional potential but lacked the opportunities, resources, or recognition necessary to achieve their professional aspirations within the institutional investment management industry. The multiplication effect of her success extended far beyond personal achievement or business expansion to encompass comprehensive talent development initiatives that would create lasting positive change for hundreds of professionals while establishing sustainable competitive advantages through human capital innovation and organizational excellence. Alexandra's recognition of the multiplication opportunity emerged from her reflection on the unconventional pathway that had enabled her own transformation from underestimated technical support specialist to globally recognized institutional fund manager. The journey had revealed systematic barriers within the financial services industry that prevented talented individuals from accessing opportunities commensurate with their capabilities, particularly those from non-traditional backgrounds who lacked conventional credentials or established network connections that facilitated career advancement within prestigious investment management organizations. The Talent Development Initiative began with establishment of the Rodriguez Quantitative Finance Academy, a comprehensive educational program designed to identify and develop exceptional analytical talent, regardless of conventional educational background or professional experience within financial services. The Academy represented a revolutionary approach to talent development that prioritized mathematical aptitude, technological innovation capability, and strategic thinking ability over traditional credentials or industry experience that had historically determined access to career opportunities within institutional investment management. The Academy development process required substantial investment in curriculum design, instructional methodology, and assessment frameworks that could identify exceptional potential while providing practical training in quantitative finance applications, systematic trading strategies, and institutional investment management practices. Alexandra recruited leading academics and industry practitioners to develop educational content that exceeded the quality and comprehensiveness of programs offered by prestigious universities while focusing specifically on practical applications that would enable immediate contribution to institutional investment management operations. The curriculum design incorporated advanced mathematical concepts, statistical analysis techniques, computer programming methodologies, and financial markets knowledge that would enable Academy graduates to contribute immediately to sophisticated, quantitative trading operations while possessing theoretical foundations necessary for continued professional development and innovation capability. The educational approach emphasized hands-on application and real-world problem-solving rather than theoretical knowledge that lacked practical relevance to institutional investment management challenges. Up next, you've got 2 more standout stories right on your screen. If this one hit the mark, you won't want to pass these up. Just click and check them out. And don't forget to subscribe and turn on the notification bell so you don't miss any upload from us.